Hello guys, and welcome back to another episode of the Breaking Bitcoin Market Update, as always, with your host, myself, Justin Wise, lead analyst and senior mentor at KrakenCryptocurrency.com. Hopefully you guys are doing absolutely fantastic today, wherever you happen to be in the world, and however you happen to be watching the show, whether you're watching on YouTube, Twitch, DLive, Trovo, Facebook Live. We're like streaming like 5 other places too. Yeah, it's all over the place. Anyways, we've got a good show for you guys today. It's going to be the end of the week wrap up. So in this week's episode, in today's episode, we're going to go over some of the trades that we've taken this week. We're going to go over potential setups for the future. We're going to go into how the market is looking as we're moving forward. Spoiler alert, it's not looking great. We're going to discuss different strategies that we can utilize to protect ourselves if the market declines further. We're also going to look for potential upside opportunities and coins that we should be keeping our eyes on. And overall, answering your questions, teaching you guys how I, as a professional trader, approach the markets, approach the charts, and answering your questions and maybe looking at some of your chart requests. So slide that leverage slider all the way over to 50, not 100. The odds are not in your favor with 100x leverage, but 50, we could do that. And let me know how you guys are doing in the chat. Again, hopefully you guys are doing fantastic. And we're going to get right over to the charts. I guess before we begin, I apologize for not doing the daily live streams. I've had a lot going on with my dad and with my family and everything. So, I'm just finding time and finding the discipline to continue doing the streams, as well as providing the services, continuing to code and making new content. So, and again, it's a new year, so we're going to make a push to get back to the daily live streams because I enjoy doing them. They're very helpful. They help me connect to the society, connect to the community. And hopefully you guys, I know you do because I get all the comments. You guys find them very helpful. And I just want to say, like, every single day I get a bunch of emails. Every single day I get a bunch of DMs in Discord. You guys are, you guys are just super cool. So thank you to all the people who have been watching for a long time. Thank you for the people who continue to like and follow the show. And welcome to all the new people who might discover the show via the browse feature or via their, recommended content. So let's go. We're going to do this together. So anyways, hopping into the stream. All right, we're going to start off as we typically do with Bitcoin on the weekly time frame. Let me make a quick adjustment here. I actually think we're good. So again, just very similar, very similar analysis that we've been doing here. So we're going to do a top-down analysis. This is the way I always approach the markets, starting from the top down. So, it's a pretty simple concept. Essentially, what we are attempting to do is that we are starting on the highest, not the highest, then we're not going to go out to the monthly, but we're going to start on the higher time frames to get an idea of what the overall trend is so that we can trade alongside that. If we can determine that there is an overall trend. If there's not an overall trend, then this lets us know that we're in an overall consolidation phase where we should be adopting a range trading strategy. And these things affect how you're going to be trading on the lower time frames, how you're going to be utilizing your automated strategies, or what type of strategies you should be pursuing to create. So anyways, the weekly time frame here on Bitcoin does show us that we have several things going on. All right. So on one hand, we do have this large consolidation area where we have markets ranging. We're going to go ahead and use the previous market highs, where we do have the market consolidating in this very drastic, nearly 50% range from $60,000 to $30,000. Now, we've seen something like this before. We did see this kind of rectangle area play out over here in this large consolidation area. And we also saw it to less of an extent play out with a smaller radius here at the bottom in 2015. We did also see this in 2018 right here to less of an extent. And this is the area that we're going to focus on the most today, this area in 2018. This is after we reached the market high at that time of about $19,700 in December of 2017. And then we put in a massive correction very quickly, just over the course of about 2 months, down to about $6,000. And there we ranged, right? We ranged there at $6,000. And this area in particular, I want to focus on so let's see here. This would be our our third movement to the downside after, let's see here, after two. So yeah, 2 lower highs and 3 lower lows, which led us to about a 3 to 4 month consolidation period, which was, not the best time to trade. I mean, we had a lot of good trades in here. We can see here that there were some pretty gnarly rallies. We put in this 45% rally, and then we put in just successively smaller rallies following after that. A 25% rally. We put in a 13% rally before ultimately breaking down to the downside. Another 50% correction down to the $3,000 area where we did bottom of the 200 daily simple moving average, where we accumulated and then blasted off to not a new high, but a pretty significant rally moving into 2019. Consolidation, dip down. Okay, so I do want to compare those two areas. And what's interesting is that we are beginning to see, well, first off, the first thing that I want to point out that I always do is that after Bitcoin reaches its cycle high, the pattern that I have noticed and that I have traded is that after Bitcoin reaches a cycle high, it corrects down to the 55 weekly exponential moving average where it bounces. It then corrects down ultimately to the 100 weekly exponential moving average, then bounces, and then ultimately finds its bottom at the 200 weekly simple moving average. That number is very important. Obviously, with even in TradeFi, traditional finance, or in any equities and assets, the 200 daily or 200 weekly simple moving average is a very important number. There are lots of algorithms that use this. This is probably the most commonly found, next to like the RSI and the stochastic. Utilizing the 200 exponential moving average on any time frame from the weekly all the way down to the 1 minute is one of the most common technical indicators that you will find. It is utilized by trading programs, it's used by algorithms, it's used by many discretionary traders, and it's used by just about everyone who utilizes any sort of moving average, which is pretty much everyone, in their own analysis or in their own trading. So very important number. And we can see that historically, since 2015, Bitcoin has respected the 200 weekly simple moving average as its overall bottom. Now we have traded below there in brief periods of punctuation, obviously, due to market order flow and the thickness or depth of the order book. At those point in times, we do see these large wicks below, and sometimes very significant. So back here in 2015, we did see a 30% wick down below the 200 weekly simple moving average. We did overall respect it here in 2018 when we declined, but then we had the March meltdown when BitMEX basically went offline for a little bit of time. And we just had this cascading sea of liquidations that pushed the market price down about 28% below the 200 weekly simple moving average. But my point is that it was not sustained. So as Bitcoin has been a largely overall appreciating asset, it has respected the 200 weekly simple moving average, and it has been viewed by investors and traders as the value back the truck up value area. And so I think we should expect that to continue. Now, the last time, if we look real closely at what price is doing here right now, it is consolidating. It is ranging between the 100 weekly exponential moving average and the 55 weekly exponential moving average. And we're starting to see that we are in the stage of our slower weekly moving averages, our slower EMAs here, our 13, our 8, and our 21, are beginning to cross underneath the 55. All right. So this is just showing us that short-term momentum or short-term price action is beginning to trade underneath medium-term price action. And here we have our long-term price action right here. So again, these are just averages of price. That's all a moving average is, but they're very important because moving averages help smooth out the volatility of an overall asset and just lets you see overall where it's going. So if we just look at the 200 weekly simple moving average for Bitcoin's price history, we can see that it's been in a nice even curving slope up. And that's why it's overall in a big macro uptrend, okay? In the big picture, Bitcoin is in an uptrend. The average of its price continues to move up, and that's what's important to note, right? That's what's important to note. We can go look at some other crypto assets, like, for example, XRP, and we can see a very different story. Ethereum has respected this upwards trajectory as well as continued to grow. XRP hasn't. XRP will likely never reach its all-time highs again. There are plenty of other assets as well. So Bitcoin is very similar to the S&P 500 in this sense, and why many people refer to it, for example, as the index fund of cryptocurrency. It's a safe investment, again, as safe as the highest risk investment out there could possibly be. But the reason it's considered safe is that over time, it has demonstrated its ability to continually, on average, grow. So there has not been a single time in history there's not been a single time in history, save for the most recent market highs right here. Right? And that's just because that's where we're at in time. All we have to do is wait. There has not been a single time in Bitcoin's history that as an investor or as a trader, if you were a complete donut and bought the absolute top, right? It doesn't matter what rally you thought was the absolute market high of Bitcoin. Doesn't matter. It doesn't matter. This one doesn't matter if you bought this one, and it doesn't matter what correction you sat through. If you had diamond hands, if you just held on and viewed your position in Bitcoin as a long-term investment, there's not a single time in history that you have not been rewarded by the market climbing higher. And this is also true of the S&P 500 as well as the NASDAQ. So the overall trajectory of Bitcoin is to the upside. We don't have any signs here that Bitcoin is in kind of a macro downtrend, right? We even talk about like crypto winters, which typically last 12 to 18 months. And they are followed by about 12 months of accumulation. So I just recently read this really good article, and I've studied this myself, but this really good article on Bitcoin cycles and the cyclicity, I believe the article used that word, of Bitcoin and markets in general. And it talked about a 12 to 18 month period of expansion, usually characterized by the last 50% growth cycle being marked by just absolutely massive growth, right? Huge skyrocketing price appreciations. And we can see that both in the last half of this recent run in 2021, and we can also see it in the last half of the run in 2017, leading up to the all-time high at that time, again, 19,000. Followed by about 12 to 18 months of what's called the crypto winter, followed by about 12 months of sideways accumulation, where Bitcoin then breaks out and re-enters the beginning phase again, the markup and price appreciation. This is very common and very similar to not common, but similar to Wyckoff methodology, Wyckoff theory of the markets, where we have the markup phase, we have the distribution phase, we have the markdown phase, and then the accumulation phase, which leads to the markup phase, which leads to the distribution phase, and so on and so forth and so on. So, this, what I can say confidently as an early investor in Bitcoin, as somebody who's been investing in Bitcoin for a long time, this is a very good looking chart to me. Bitcoin does nothing but continue to fill me with confidence. So that's important to say. All right. Now, having gotten that kind of hopium, and that's not hopium either, right? I'm not saying the market's going to turn around right here. In fact, I am of the overall bent as I have been. I've been bearish for quite a while. And I think that we are going to trade to lower prices. Of course, we're going to have these really significant rips and tears, these relief rallies in bear markets. Again, we had this 40% rally in 2018. We had a 38% rally. If we look at this kind of price declination beginning in 2019 and ending in the spring of 2020, where from peak to trough, as we traded down 72%, we can still see that we had really significant weekly rallies of 40%. We had really significant rallies of 73%. And then we reached the bottom here around the 200 weekly simple moving average. So looking at all that and looking at the way that Bitcoin has reacted historically, and keeping in mind that the crypto markets are entirely correlated, right? So Bitcoin is the canary in the coal mine. Bitcoin is the, what's the term? Like the whale that swims first or the bird that flies first. I can't remember exactly what that terminology is. But the markets move with Bitcoin. This is due to its market capitalization. And this is also due to its status as one of the main trading pairs against other cryptocurrencies. So many things are just about everything trades against Bitcoin first. There are lots of other things that also trade against Ethereum. And while those ecosystems have begun to decouple a little bit, all things follow the road. All water flows downhill, meaning that when times are tough, things are going to begin following along right inside with Bitcoin. And we do see crypto market correlation at an all-time high. So having said that, the last time that we saw, so where are we at today? So Bitcoin reached its recent peak of 69,000, and we've traded down about 50% to now where we're trading in the high 38,000s. We are consolidating between the 100 weekly exponential moving average and the 55 weekly exponential moving average, which is a range of about 20%. So let's flip over to, there we go. Let's flip over to this chart. All right, which is a range of about 20%. Now, that's a fantastic range. It's a very tradable range. A lot of activity, a lot of action to take, particularly on the lower time frames. And we'll be looking at that here in a little bit. But we can see that the bulls, we haven't had a bullish weekly candle in a month now. All right, so the last one was at the very end of January, following just nothing but trauma and beatdowns from the bears here. And look at these two very weak green weekly candles. We're going to close here in 2 days and 3 hours. And while I do expect a little bit of weekend upside here, because we typically see the markets move up over the weekend, if we look at, there we go. So last week, let's see here, we had from open to close, even though we moved more from low to high, but the market was only able to close up 1.93%. This week, less than 1% total movement in price from open to close. I mean, what is this? A blue chip stock? We're not, we didn't get into crypto for these kind of weak movements. Come on, guys. So listen. The last time that we saw price consolidate the last time we saw price consolidate underneath the 55 and above the 100 and move sideways, again, was back here in 2017. And as we can see, what happened following this period of ever tightening lows? We collapsed below the 100. And this right here, this is what I'm going to be watching for this time. Because here's the thing, this area of the market, I initially traded wrong. All right. So you guys can go back because I was live streaming on this day, on the hour, on the minute that price began this bearish movement down and broke this level of support and started trading lower. And for the first day, the day of the happening here, I was irrationally bullish. I, at that time, was very much into, and still am, was very much into fading price movements. And I had faded these breakouts. I had faded these breakdowns as well to great success. And at the time, I was kind of consuming a lot of Bennett's content. And I was looking for... I was really into, at that time, optimizing my kind of discretionary trading strategy for lower timeframes. I didn't realize it at the time. The concepts that I was studying and focusing on were stop loss hunts and using limit orders to enter right above and below support and resistance instead of entering not at those areas and setting those as my stop loss. I was, get very much into that market maker kind of hypothesis theory. So what I'm saying here is that basically if I saw price break below support on high volume, I would consider that a stop loss hunt, that a lot of liquidations occurred. And then I'd try to take that the opposite way. So if price was breaking down, I'd take a long because I was of the theory, so the mentality that that's the way that the markets move. And while they do to an extent, if you kind of cling to that and go down that route, it really only kind of works on the lower time frames. And even then, it doesn't work as well as people think that it does. I think a lot of those people are really... it's easy to get conceited that your way of trading is very good. And when you do that, you kind of forget the basics of trading. And one of the basic concepts of trading is support and resistance and volume and momentum. If you see price break above a level that it's been struggling to break up above, there is a high probability that it's now going to run because that is a signal to buyers that sellers are now no longer willing to sell at that price, that they're going to start jumping their bids up because buyers are being more aggressive at these areas. And aggression is one of the most important areas of the market that you have to get correctly. The aggression, the momentum, the volatility of a movement, how much volume is there, how much buying interest is there really. It is easy to get stuck. Now that strategy also of entering fading breakouts or breakdowns does work really well in ranging environments. And I've talked about this a lot. Essentially, you should fade every breakout and fade every breakdown. But there's a trick to it, and I say this all the time, because you're only going to be wrong once, and that's when it's the actual breakout. But when do you determine when your trade is failed or if it's just going against you a little bit and going to move in your favor? Okay, so what you want to see is something like this. This is what we almost always see. So we want to see a nice big candle that closes that has very little wick, right? A lot of wick is going to indicate indecision in the market. So as we can see here, although Bitcoin is stair-stepping up here, we don't have really any clear convincing signs here that this is massively super bullish momentum. We just have these very weak candles. And more often than not, this has just come up here to resistance and die. But then we get this massive candle right here. This very strong open weekly candle. We can see that we have, what is this, a price movement of 26.73%, so a 27% weekly candle, showing a lot of conviction from the bull, showing a lot of buying pressure, a lot of market order flow to the upside. And what follows almost directly after that, we have markup of about 163%. So we need to see a high conviction candle. And back in 2018, that's what we saw on this down candle in November. We saw a high volume, high weekly bar that closed below support, and the market continued to follow. And this was the trade. Now, while I was smart enough, and I guess savvy enough to initially, I had taken this long once we broke support. And those I'm sure there's guys here around who were still in Discord trading with us at that time. Most of the people who are with us have been with us for quite a long time. But once we broke down, and once we closed below there on the daily basis, I did flip direction and go short. And we were able to ride this. I think we took profits. I'd have to go back and look at my trade logs, but we did take profits somewhere over the course of the next 2 weeks. And we didn't absolutely nail the bottom, but we did get long after this and things were good. And we took a lot of like small trades down here as well. So that's what we need to watch for. I guess overall, my recommendation here and what I'm trying to show you guys is that don't get locked in too much when we're in a range and consolidating. While range trading strategies are very good, and that's actually what I'm utilizing in my discretionary strategy right now. This time around, when we break this level of support on a strong closing basis, we are going to be adding to our short positions and looking to take this down for the big trade, right? We're looking for this big 45 to 50% movement to the downside to the 200 weekly simple moving average. And that's where we're going to wait for the accumulation phase to end and be looking for opportunities to go long, all right? Because that's what I'm expecting out of this cycle. We can see here that we had a brief period of consolidation here. What happened here in 2020 is that the market did dump down to the 200 weekly moving average, which was a fantastic buying opportunity. And then it rallied very quickly back up essentially to the area that had been ranging and trading in. So if we look at this kind of big range right here, it just traded right back up after a deviation from that range. It broke right back up and traded alongside. And we have this long period of accumulation before a big breakout maneuver right there that lasted for quite a long time. So those are the trades we're looking for. The big picture trades where we can catch massive trends, where we can catch big price movements. And right now, I think the risk to reward ratio and the overall direction of the market is to the downside. As we can see here, we're in a weekly downtrend. So we're putting in lower lows and lower highs. And now we're also in this overall area of a downtrend. We've entered into an area of consolidation. Now, if the market breaks to the upside, we will know this area to have been accumulation and not distribution. If the market breaks to the downside, we'll know this area to have been redistribution following a bearish trend. And overall, I just have to consider this area redistribution currently right now and expecting that any rallies that we get in this area are to be shorted because this overall larger movement to the downside hasn't been completed. Now, what would I need to see to change my mind? Because I just gave you guys the example as a trader of how I lost money, although I was able to pull it back and make money quite a bit, actually. I did initially trade this maneuver wrong, right? I took a long when I should have just been watching and waiting for a convincing weekly close and then taking the short. So what would I need to see to disprove my theory, right? What would I need to see to not be bearish? Well, I would need to see something very similar. Hold on, let me get the EMAs back up. I don't know why they disappeared. There we go. I would need to see price. Let's change this. I would need to see price put in a very strong weekly bullish candle, right? Very little wick, strong open, strong close, and we need to be breaking above resistance here on the weekly time frame. So we definitely need to be trading above the 55, and then we might get a relief rally. We might get a more significant rally. At that point in time, I'm not trying to predict when the market's going to turn around or stop. I just see that the market has done some sideways consolidation. We've had an opportunity for longer pocketed investors to begin accumulating Bitcoin, and it's possible that we can sustain this rally. The length of a rally is directly proportional to how much consolidation time you have prior to the end of that rally. So as we can see here, the market moved sideways here for about 2 months, right? And it was able to sustain a bullish run for a lot longer than that, right? So for about, let's see here, for about 3 months, it was able to sustain a bullish rally, okay? Now, we've only had 2 months here of sideways accumulation, which means we might be able to sustain another 3 months of continued upside. However, keep in mind that we did have here this 2 months prior, actually 3 months prior, of consolidation. Actually, this is about 4 or 5 months right here of accumulation prior. All right, so the quantity of time of accumulation is directly proportional to how long a trend can sustain itself. So I would not be expecting any new all-time highs until we have a more significant period of sideways consolidation. All right, so things to watch for on this macro scale is a weekly or a daily close below this 100 weekly exponential moving average that is strong, that has high volume, and that has very little wick, right? That is mostly candle body. If you see something like that, the market is trying to tell you that that sellers have won the battle, and that they are likely going to continue pushing price down until we reach another value area, which, as we can see from the charts historically, has been the 200 weekly simple moving average. So as a trader, you could watch for that. That would be what would be considered a breakout trade or a momentum trade, a breakdown trade. So watch the charts for that closely and look for your opportunities to take that trade. That's going to be your big macro positioning. Now, as we sit here in this sideways accumulation phase, if you're holding a cryptocurrency portfolio that is mostly crypto assets, then there are other things you can do to protect yourselves. So I am still 50% in stable coins. So I have that broken down. Let's actually pull up I should pull up a text editor here, and we'll talk about this, right? Let me go see if this is the way that I want it to be. We're going to switch over to this chart. Okay, we're going to switch over to this chart because I want to show you guys how I'm positioned. So I have to grab a different keyboard. Hold on, guys. Why are my keyboards not working? All right. Oh, that's annoying. Okay, so shout outs to K7 Jixer 1000, Danver Elst, and Ron Legato. Thank you guys for joining the stream. I have made some modifications over the last couple of months, but nothing really crazy. I've talked about this in my market analysis. I've talked about this in my newsletter as well. So I'm holding 50% stablecoins, and that number has kind of gone up and down, but it's hovered right around there. There were some allocations that I made, but then recently we did pull some money out of Phantom, so that number has gone back up. And I found that I wanted to kind of ape in to the Anchor protocol on the Terra Luna ecosystem, which is paying 20% APY right now. But I did, that was initially my plan. But you can't go full weeb, right, in one area, okay? Because there are risks to algorithmic stablecoins. they can lose their peg, as we've seen with MIM, for example, although MIM was able to recover pretty well. And, you know, UST, I talked about this a couple of weeks ago. When all of that wrapped Ethereum was taken in that pretty large hack, Jump Capital were the ones. They're one of the largest trading desks in the world. They were the ones who put that money back, right? They invested $1 billion. So Terra Luna raised $1 billion in Bitcoin to hold in their treasury to protect the peg. So that, you know, once I saw that too, I was like, okay, cool. That's really good to see. All right, this is, you know, Luna is really crushing it right now. So Anchor Protocol, you can hold UST. You can, if you know, there's a couple different ways to do this. You can just buy UST on the open market. I think that's the easiest way to do it. Then you go to Anchor Protocol and you can stake your UST, provide liquidity, and you get 20% APY. No impermanent loss, just 20% APY. And I think that's a fantastic way to do this. The other 25%, I'm holding in DAI, right? And I'm lending my DAI out and earning about 4% APY on Compound. And that's not really anything crazy or amazing. There are probably other ways, better ways that I could probably make money with that stablecoin. But that just protects me, and that also, you know, preserves 50% of my portfolio locked in cash, and that lets me know that I'm going to have that stablecoin on the side to buy dips. All right. Yeah. There are other ways to do it. Traditionally, the way that I've done this is by holding long-term shorts open. And I've always wanted to experiment with holding long-term options open as well. But, you know, I'm just not much of an options trader, you know, and I've learned more about it recently, but I'm just, you know, the way that I've made money is trading futures and cryptocurrency and trading spot altcoins. So that's what we're going to continue to do. All right. So anyways, that's what I'm doing there. And let's talk about. All right. So we're looking for, anyway, so we've got, just a second here. Let me check. Okay. So weekly sideways consolidation, looking for a bearish breakdown right here. That's the thing to kind of watch for. And until that happens, we can continue to counter trend trade these breakouts and breakdowns. We're getting relatively close to the amount of time that we did move sideways here back in 2018. But back in 2018, we did move sideways for, let's see here. 21 weeks, right? So we reached the bottom in June of 2018 and we broke down in November. Pretty much the same time. This is the 18th. The 18th of June and the 12th of November is when we ended up breaking down. So we'll see how this compares back in history. We can see here we reached the bottom here and then we traded sideways for 9 bars. So 2 months, 1 week, and here we've reached the bottom and it's been 7 bars. So 2 more weeks and we reach the same amount of time as here. And -7, 14. So yeah, 14 more weeks if we were to do the 2018 movement to the downside. So it doesn't really matter. Time doesn't matter. But what does matter is which side we see break with momentum. All right. And we have to remember that we are in a previous downtrend and we're just not seeing any strength here from the bulls, particularly over these last 2 weeks. This is very weak, right? This is very weak. All right. Let's go down to the daily. We can see this range really clearly on the daily here. Okay. We can see this range really clearly on the daily, and this is relatively interesting. So we have something that's happening here that doesn't happen too often, but we have lower highs and higher lows. All right. So this is one way to visualize this is a symmetrical pattern. Okay. So essentially what we could possibly see as well is a Bitcoin trade inside of this range, and we're watching for the break to the upside. Now, I prefer not to use these diagonal marks as support and resistance for the breakout. So essentially what I mean is that I've never really had good experience, although of course I've had some winning trades doing this, but for example, a lot of people will tend to use diagonal lines. A lot of chart pattern traders will use diagonal lines to look for breakouts and breakdowns. So for example, if price were to come up here and then break above this diagonal line, they might get very bullish and look for a long. But more often than not, what I see happen is that price actually really respect these horizontal lines, not these diagonal lines. It's the horizontal lines. Now, if price is going to, now obviously here we can see price stay within this range. We can see that and respect it. But if price were to break up above this daily diagonal, I wouldn't be looking for a long necessarily, unless I had taken a counter trend one down here or got some sort of bullish signal or bullish momentum here. But I would be waiting for price to actually break above the horizontal, right? That's typically when we actually see the breakouts. That's typically when we actually see price respect the fact that it just broke out, not necessarily when it does the diagonal thing. Diagonals are kind of good for visualizing price movement in a different way. You know, like if it's hard for you to make sense of the direction of the trend or the way that kind of price action is evolving. But it's not super helpful, in my opinion, for actually using as a fundamental part of any kind of systematic strategy. And as you guys know, we're systematic strategy guys here. So anyways. Now we can see that the killer trades to take, right? Like the good trades to take have been fading these breakouts essentially of this level of horizontal resistance. Okay. So let's just kind of take that back. And I would say not really a good area down here to the downside because we're not down to these previous lows here. Yeah, but fading the breakouts have been good. Now, one other thing that would be good to see, as I was talking about earlier, like what's something that would make me be bullish here and kind of look for new highs or look for actually a more sustained bullish trend to emerge from this area of the market. If the market, as we see, we are making higher lows. So let's see what happens. Let's see how this plays out moving into next week. Let's see if we drift down here. And then if we start to march back up, again, that's a potential trade idea for next week. If we actually get down here to these lows and move back up for another lower high, that's going to be a trade. That's a very good tradable trade right there. We got a 17% range. Now, if Bitcoin gets up here, back up to this level of resistance, and instead of doing what it did here, which is a swing failure pattern, which is where it rejects, moves up, makes another lower high, and then breaks down below. And again, here was that entry trigger right there. So let's take these drawings off and move through that again. When price comes up here to a level of resistance, let's go back in replay mode. That'll be easier to see. Okay. So what do we have here on the charts? What do you guys see? All right. We've got a downtrend and then we see a big bottom. We see a big bottom. We see a high volatility movement to the downside. We're starting to get buy signals here from time transformation. Parallax goes oversold. Okay, we get a huge big red bar on Wadatar explosion, and then momentum starts drifting to the downside, which is letting you know one way to use Wadatar explosion and to catch a trend is that, for example, when the bars start declining, you exit the position and then you re-enter when the bars turn a solid color again. I talk about that in the Wadatar explosion video. Make sure you guys go check that out over here on YouTube if you haven't seen it. So we see price begin descending to the downside, and then we see volatility start to die down, volume start to die down, Wadatar explosion right here, letting us know that maybe we should be looking to get out of our short trade or that momentum is switching the other way. Price action is telling us that as well. And I told you guys when this daily candle happened, if you guys have been following the live streams, when this daily candle happened on such high volume, that's kind of what interested me and why we took that weekly long position, right? Which we're still in, right? The weekly long position's gone up, it's gone down. But anyways, this is when we took our weekly longs. But what we have here is the market consolidating, breaking down from that consolidation in the context of a larger downtrend. And then we start to see bottoming signs. So did bottom feeder fire here? Yeah. So bottom feeder fires here, which is our macro bottom signal, letting us know to start looking for reversal trades. So we did take that weekly long position here, but we're watching for a few things. Again, let's say we take a long, okay, and our target's up here. Okay, easy. Or we're using Quadriga to measure our target from somewhere down here. So we're looking for a long trade using Quadriga. So we're looking for like 39,322, 41,344, 43,336. So let's start walking time forward here in replay mode. Okay, so nice, big, beautiful breakout candle, right? And we're not necessarily at resistance here yet. We are at previous support, which could turn into resistance. But again, this was kind of the thing that I said to watch for. It's kind of a symbol like this. Okay. Ooh, went a little too far there. So let's go back. Now, that big green breakout trade was tradable here. So we walk forward a little bit more. We didn't get kind of the big oomph or push to the upside, but another 3 days, another good consistent 3 days of upside, 4 days of a doji, kind of letting you know that the market's indecisive here. We're not too sure. And then the market starts moving to the downside. We're putting in these wicks to the upside. We're just unable to cross above this level of resistance. And here we are, like we're at this level of resistance. This is the previous high. The market reaches this area and it's not able to convincingly close above it on a daily basis, right? So no daily close above resistance. And we've had this nice push to the upside. So fading this breakout would have been the trade to take here, right? Taking the short, once you have this confirmed sign of resistance, we have this bearish engulfing candle. Bearish engulfing candle means that our low, or excuse me, our close is less than the open of the previous candle. That is a bearish engulfing candle, okay? We also get the sell signal from time transformation down here. And we have lowering momentum from Wadatar explosion, even though the market was previously moving up on the previous day. So all signals that maybe we should be looking to get out of our trade, and the market continues to move to the downside here. And then it bottoms out, get some wicks, we get another push back up, and this is what happens, okay? Now on this candle right here, right? On this movement right here, all right? So what's happened here, all right? So we've had this nice rally, we've had a fade potential, we've had a price pullback, and then price pushes up here. So maybe we didn't take profits on our fade trade. So maybe we're in the red, right? And we see this breakout candle. Now, is this a long that we want to take? Not necessarily, because two things. One, we're not closing higher than resistance. All right, we're making a lower high so far. Okay, we don't know if it's going to continue on to become a higher high, but at this point in time, we don't know what's happening. This could be a lower high, or if we wait a little bit longer, it'll be a higher high. But we do know that we're at previous resistance, and we know that the market responded negatively here the last time we were here. Okay, so this is not necessarily the long trade that you want to take. What you kind of want to be looking for, in my opinion, one setup I look for here is a swing failure pattern, right? Which is when the market makes a high, it corrects, it rallies back up, but it makes a lower high, and then it corrects again. And when price breaks down below the previous low that it established on the correction, that's your traditional entry trigger. So you enter here, and you set your stop loss here, and you target 1-to-1, 2-to-1, 3-to-1 risk to reward ratio, whatever your kind of methodology is for trading, or whether you're using a different take profit method. Okay. So we established this swing failure pattern, not yet, but we're watching for it. Okay, red candle. That's not necessarily what we want to see. If the market pulled back, and this is just a pullback, we want to see it kind of continue up, but it's okay to struggle at resistance. Again, our entry trigger for a swing failure pattern setup or a rejection is going to be when price closes below here, and then we're going to take a more significant short, or what we're looking for is actually a convincing daily close above this area, and then we're going to look to take the rally to the upside, okay, the breakout trade. Oh, there it is. So the very next candle is your, oh shit, this is not the upside that you're looking for. This is a breakdown candle. Price breaks down below this previous low after making a lower high, and you enter on this daily close. All right. So let's just say we did 2-to-1 risk to reward ratio. We entered at the daily close. We put our stop loss right here, and we target 2-to-1. I don't think we would have hit 2-to-1. We would have hit 1-to-1. I don't think we would hit 1-to-1 either. Let's see. Let's see how the market works out. There we go. We hit it on the wick. All right. So there's the nice one-to-one price movement right there. But you guys see the concept here, right? You guys see the concept, swing failure pattern, very common pattern in cryptocurrency. High, unable to make a higher high. Price breaks previous support. Price moves down about the same distance as, that's another way to do it too. So we could see this with a fib. Price moves down about the same distance as the movement from here to here, right? So you just take 1-to-1, 37,412, and that's even a better target right there. So all we did there, guys, is I used a fib retracement to measure from the high down to the low, and then that movement doubled is going to be a -1 extension of or retracement of the Fibonacci. So I just used the Fibonacci tool there to easily get 1-to-1. So using that, you could have actually done it a little bit differently. So you're still entering here, but you know in advance what your target's going to be. So again, we're going to measure here to the low. We've got our target, so we can establish our target. Horizontal ray. We can establish our target down here. This will look even more bougie if we go right here. Okay, so we've used fib to get our targets. Not really, we're just using it as a drawing tool. And we're going to enter here for our short position, and we know where our target is. And let's say we want 1-to-1 risk to reward ratio. That just means we have to put our stop loss right here. If we want 2-to-1, we put our stop right there. Now, keep in mind that adjusting your risk to reward ratio like that by moving your stop loss, not your take profit, does a couple of things. Because you're moving your stop loss very close to price on a higher time frame like this, it does increase your risk to reward ratio, meaning that if you lose, you'll lose less, and if you win, you'll make more. But it also affects the probability that you will now win. It affects your hit rate. So as you adjust your hit rate, you will typically influence your risk to reward ratio or your profit factor. As you adjust your profit factor, you will tend to affect your hit rate. And it's usually negative for negative. So if you positively increase your hit rate, you typically have to reduce your risk to reward ratio. So this is why you'll see day traders, for example, with a high hit rate only have maybe a 1-to-1, if that, risk to reward ratio, meaning they only make $1 for every dollar they risk. So if you have a 1-to-1 risk to reward ratio, meaning you make $1 for every dollar that you lose or that you risk, then you need to be right more than 50% of the time. Because a 1-to-1 risk to reward ratio means that you do lose $1 for every dollar that you make, and you make $1 for every dollar that you lose. So you need to be right more often so 50%. You need to be right more often than 50% to win with the 1-to-1 risk to reward ratio. And that you have to be right less often, the higher your risk to reward ratio is. So if you have a trading strategy where your risk to reward ratio is 2-to-1 or 3-to-1, you do not have to be right 50% of the time. You can afford to be right maybe 33% of the time to 40% of the time, because you don't need to be right 60% of the time. You can have 60% losing trades and still be profitable if when you win, you make more to account for the losses. So if your risk to reward ratio is less than 1, then you have to have an extremely high hit rate. Okay, you can't afford to be losing if your losses are larger than your wins, right? That's a dangerous area to be in. If your losses are larger than your wins, then you're going to need multiple wins to make up for just one loss. And if you're losing half of the time, which most traders do, and that's totally fine, you can make a lot of money winning half the time, only winning half the time, then yeah, you're in a problem. So, okay, so swing failure pattern. Market puts in this fuck you doji. And that's kind of interesting here too. So we have a rally to the downside. We have 4 days of sideways. Okay. Then we get this big wick to the downside on high volume. We can see bearish momentum dying down. And then we get a breakout candle. Okay. A little bit of a pullback to support, and then a big green fuck you dildo. All right, so what happened here following this? Okay. Price came right back up to the area where it had previously rejected from and puts in a doji candle, a sign of weakness. All right. When this happens, I'm thinking we need to fade this breakout. And that's the right thing to do. Okay. Same thing. What do we see here? We see the market move down quite a bit, 4 days of consolidation, and then a nice breakout candle that immediately is rejected, lower high. And that's where we find ourselves today, ladies and gentlemen. Okay. All right. So we have now made a lower high. However, we are holding this area of support. So I would watch for the breakdown here to take price further down. Or since this is the weekend, I am actually expecting to see a little mini rally here. Maybe price moving up to about 40,728. We typically see upside movement on the weekends. So again, just got to be watching for the same thing, guys. I'm not expecting any price action over the weekend to dictate how the market's going to move on the weekend, on the weekdays. So we'll see. We also cannot forget here, and I'll pull up a chart here so that you guys can see. The market is directly correlated to the S&P 500 right now, so high. So I took a short today, and I want to show you guys why. So it was about 8. So right here, it was about 8 o'clock. I'm going to pull up the 15-minute chart of Bitcoin. So about 8 o'clock is when I got to my desk this morning after I dropped my kid off at school. And I saw the market had been moving to the downside. I saw sideways consolidation, and I saw that we were at and below VWAP. So I was actually thinking, okay, well, if we break above VWAP, then I'll be looking for the long up to these 2 areas of standard deviation. But since we're underneath and we're in an overall downtrend, I need to look for reasons why I might want to consider a short bias. So at that point in time, I started looking at the SPY, and I saw that the SPY at that same time, so let's go find it. There we go. That's not right. Let's move this to. Okay. So I saw that the SPY had gapped down. Okay. And we had been moving down quite a bit. All right. Now at 8:15. No, sorry. Yeah. Wrong day. So 8:15. Okay. Market's moving sideways. And I was tempted to take a long. All right. I actually probably should have in hindsight, in retrospect. But the SPY rallied up, rejected from VWAP, and began moving down and then broke support here. All right. And when I saw the SPY moving down, I took my first position on BTC this morning. I actually took 2 day trades today. The first was the loser, and I want to talk about that. So let's see here. Yeah. I actually just entered a little too early. I took this short right here. And I had set my stop loss pretty tight, like up here. And I shouldn't have done that, right? I set my stop loss right above this candle. I shouldn't have done that. That was just way too tight on low volatility. And I got hit almost immediately. And then price did move down in my favor. So another example, you got to be careful with those tight stop losses. So for my second trade, I did what I normally do, and I used a starter position. All right. So I entered for about just 1 BTC here. So just kind of starting off with the position while it was moving sideways and looking for that breakdown again, because I saw that the SPY was continuing to trend down. All right. At that point in time, we were here. And then once I saw this, I added 20 BTC to my position. And then we closed here. Not at the absolute lows of the wicks, but I started taking profits around those areas. So not bad. I wish I would have been, I just wasn't there early enough to catch these larger moves. And ISAspot, which is, one of my automated strategies, does catch a lot of these like reversal movements like this. But as with most of my automated strategies, I only have it handling, like $5,000 to $10,000. It just makes me feel more comfortable. Yeah. It's pretty simple. Let's see here. Kimozabi says, how about Bitcoin is currently in accumulation, and then we have a spring down to 26,500 to grab them stops and break back into the consolidation. That's what I'm looking at rather than a redistribution. So I think that that's entirely possible. All right. We don't have to go down to the 200 weekly moving average. Although history has shown us that we tend to do that, right? So essentially, you're looking for like a deviation from the range, a movement down, and then back up into consolidation. Well, in trading concepts, I mean, that's just going to be reacceptance of the range. It's going to be called a deviation, right? So a breakdown of the range. And still, I think the absolute trade to take is that breakdown, right? And then you just want to see signs of reversal, right? Typically what you'll see with a reversal is dojis. And then following dojis, you'll see, again, that same thing I always talk about, big candles with high momentum and very little wicks, right? So those are the candles you want to follow. Dojis are going to indicate that the market is in long wicks, are going to indicate that the market is indecisive right now. So right here, you can see all these wicks to the downside and price barely able to move. You're still kind of looking for a breakdown trade. But then you see this nice green bullish candle and price begins moving up, and you want to get in along somewhere around here. That's just what you want to do. So same thing. If we put in a convincing red candle here, I'll be looking for that momentum and breakdown short even more. And then depending on where we stop, whether it's 26,005 or whether it's 18,000 or whether it's 20,000, I'll be looking for the same thing we see here and here and here and here and here, which is sideways consolidation following a large movement to the downside that's pronounced that ends with a big breakup candle. And that big breakup candle is your long signal. Let's see here. I like that, Joe. So Joe says, yeah, just wait for the trend. For me, the killer trades to take, we're staying far off of because this is sideways BS. Indeed. Yeah, I mean, listen, trading with the trend keeps you so safe. I mean, that's probably the biggest thing that has turned my trading around, right? And while I still do range trade and do deviation from the mean, the biggest trades that I've taken and the biggest winners that I've had is the ones that I have added to, is the ones that I've had conviction in, is the ones that have been in the direction of the trade. And I've been able to see lots of reproducible evidence for why this trade is going to progress and continue moving forward. Breaking resistance, gaining in volume, moving averages beginning to slant up, all of those things that really help, as well as my indicators in my system. So okay. Okay. So here on the daily, I'm biased to the downside. Let's turn off replay mode. I am biased to the downside. I see that we have trouble spots for the bulls here and trouble spots for the bulls here. So what I would like to see is a retest of these lows in the 33 area. Or alternatively, if price respects this symmetrical pattern, and we continue forming lower highs and higher lows. So we're just going to get tightening. It's possible to just get tightening volatility, that we can strict the band of Bitcoin trading, and volatility dies down. As we can see, Wadatar explosion is in a downtrend. Volume's also in a downtrend. And then we essentially just take the breakout trade. But I really am biased to the downside here, guys. So okay. Let's check out crypto bubbles. Okay, overall, kind of back and forth day for the cryptocurrency markets here. We have XRP up 7.5%, Kadena up 7.8%, Zcash up 7.2%, Rune up 9.6%. See if you guys can see that kind of okay. No, you guys can't see that. It looks like crap. Here we go. Hey, Kamano Trades, good to see you. No, not yet, Ron. Although she did just recently learn how to feed fish. Good to see you, Kavano Trades. Blue Box Territory. Can we have we look at XRP? Yeah, sure, man. All right, so you know, I gotta say this is actually kind of interesting because XRP is is kind of in a weekly uptrend. This is the weekly chart of XRP. We all know market high at $3.31. This is when C-SPAN told everybody to buy XRP. We did recently bottom at about 11 cents right here. So we are up at 569%. So good XRP trade out there for the XRP army. Okay. So kind of interesting value proposition here too, or not value proposition, but interesting market dynamic here because we do see that weekly 200 simple moving average continuing its uptrend. It's very similar to Bitcoin. So XRP and what's the word I'm looking for here? Ethereum and Bitcoin both respecting that kind of big macro uptrend because of course XRP is one of the older cryptocurrencies as well. Certainly playing second fiddle to Ethereum and certainly not as much use case or as fun or as sexy as Ethereum. But I mean, a lot of people out there are like into the XRP. I've never been one for the ZERP army myself, but it is what it is. So, but I'm not going to deny what's happening here on the charts. All right. So XRP bottomed at 11 cents. We're up over 500% currently so far. Now, not to say that XRP hasn't taken its lumps. So XRP here has just recently corrected 74%. And then here we had another 60% correction. So, excuse me. So XRP has fallen more than BTC, particularly if you bought up here at the highs. But if you began slow scale, I guess accumulation from 2018 to 2020, you've been rewarded. It's not been too bad. XRP has kind of put in this big double bottom too. And I guess we'll see. So we're finding support here at about 50 cents and we've gotten lower lows, lower highs and higher. This is our first higher weekly low above the 200 simple moving average. Does pretty much look like a descending triangle, doesn't it? Now, as I said, this isn't really the area that I would watch for. This, if I was looking for any horizontal, it'd be this one right here at about $1. And then we could take that movement. Right there. And almost certainly use this as your stop loss. So that's a 2.7 risk to reward ratio. Kind of the breakout of this little consolidation phase if we break above this previous high and break out of this downtrend that we've been in since April 2021 and actually look to come back up here and clear this liquidity above this double top, right? Actually, this swing failure pattern. So here's that pattern again. Market rallies off of a bottom, makes a high, corrects, makes a lower high, and then we can see it breaks this area right here, and you have the other 50% of the movement right there. And let's go measure that out. Is that a 1-to-1 as well? So right there. Let's measure the other way, sorry. Yeah, it's a 1.618. You would have hit the 1-to-1. Okay, so we've got some we got a potential setup on XRP. On the other hand, on the other hand, if XRP is unable to put in any bullish momentum here and consolidates down here, then the opposite. I would be looking for that breakdown trade right there. So probably take this right here. Oh, whoops, I didn't want to do that. Boom. Just get rid of that fib extension. It's not really doing what I want it to right now. Yeah, on the other hand, yeah, we got to watch for this breakdown right here. We don't want to lose the 200 simple moving average. That's not good. Because we already lost the weekly 55. As you can see, we've just flipped it from support to resistance. Let's see if we can get back above it. Getting above that 55 is important too. Kemozabi asks, why not do the horizontals on the closes and wait for a close above on that time frame to denote a breakout? I mean, listen, when it comes to like drawing up the charts, a lot of it's preference. So the reason why I like to use highs, although to be honest, this has changed throughout my trading career. However, my current philosophy right now is that very often, so let's use BTC as an example here. Horizontal ray, and we're going to mark this high, right? So if we said, okay, and we're going to change this to an initiation level. We're waiting for a higher daily close to denote a breakout. Well, we got a higher daily close, 2 of them right here, but it did not lead to a breakout. And we got a higher daily close here, and we got a higher daily close here, but it didn't happen. So I like to use the highs because that represents where the actual stopping liquidity was, like where price actually stopped. So if we look now, now that I've switched it from that close to the high, we can see that we never got a daily close above that high, right? So price was unable to sustain its momentum above a previous level that turned the market around, because the market turned around there. Market turned around here, market turned around here, and market turned around here. Blue box territory. I don't hold XRP, but they have something coming up with the SEC this week, which apparently should be a positive. Wondering if I should get in a long or if there is a sell the news coming. You can just watch the chart. I mean, it's dangerous trading into fundamental events like that, but it's also quite profitable if you're able to get your direction right. But yeah, essentially the SEC has been investigating XRP, and they have not been doing very well, all right, because the SEC has asked for more time so that they can produce more evidence, and the judge has denied the request for more time. So I think we're going to get a favorable potential ruling for XRP coming up in the next week, which is good for the cryptocurrency community in general. Mr. Ether wants to take a look at Hex. We're getting ready to pamp. I'm not seeing it, man. We just made a new low. So yeah, we might get a rally here. All right. But I just need a little bit more than this doji, right? We got to be making higher highs, right? I got to be in something that at least smells like a trend. You know what I mean? So Hex just made new lows. So I would be expecting, if we do rally, a lower high. It'd be really bad if we rejected from the 55 and made new lows too. Yeah, we just made a new low. So unless I see the market convincingly turn around, I'm going to assume that that downside trend is going to continue. All the money is going to flow into Pulse Chain, man. Pulse Chain to the moon. Yeah. No, yeah, we broke support here and moved down another 25%. If we do move up, I'd watch the 55, but definitely here too as well if we're able to get above that. So, you know, again, rule number 1 of crypto: don't catch a knife. That's a potential 60% to the upside. But I just got to see some more, man. I got to see some more. Yeah, so let's go down to the daily here. Yeah, and same thing. Just here we go. Look, we're not even able we haven't been able to break above the 21 daily, even with this big bazonga pump candle. That's a scam candle, man. No follow through. So if we get back up here, break above the 21. So if we like stop right here, come back up, break above the 21, I could see us moving to the 55. I take that breakout. But that is essentially going to be us coming up here to the weekly 55, and then I'd be looking for kind of that bigger macro rejection. He's like, yeah, you're right. It looks terrible. Hey, good to see you guys. Thanks for coming to the stream, guys. Pretty much all. Hey, Mud, good to see you, man. Cavano Trade says pretty much all risk on assets have been struggling for months now. Hold on a second. Let me switch over to that. Hey, thank you, Sneaks. Thank you, Dave Rice. Mud, thank you guys. Thank you guys. Thanks for joining the stream, guys. Good to see you guys. Yeah, Hex kind of looked like AIDS, didn't it? Cavano Trade says, pretty much all risk on assets have been struggling for months now. I've been scooping up some assets, but still not in the green. Yeah. No, I mean, that's okay. Like, it depends on your time horizon and how long you're willing to wait. So, there's all kinds of different things that we can do as traders. So I'm working on a YouTube video right now, and I'm going to be releasing some pine coding material and courses over the next few weeks. So it's very you know, there's this I hear it in music a lot. There's, you know, and I'm not a religious man, but there's this funny, it's not funny, but I guess it's like inspirational, but this like quote, and you know, it goes, I'm sure you guys have heard it, you know, it's like in an ICP song, and I've heard it in like a Joyner Lucas song, and I've heard it in some rap music, where I think this preacher is going like, you see, the problem is that people get stuck in what God used to be doing, right? What worked 5 years ago may not work today. If you want to grow, you got to be willing to change. Not everybody that's in your life is meant to be in your life forever. Basically, that's how it goes. You guys have probably heard it, but and that's the thing with trading. It's easy to get stuck in the same thing, right? Or it's easy, you know, like this is why, not to brag, but this is why you've seen me be here for like going on 4 years now. through market ups, through market downs, through market chop. It's because I continually try to learn and adapt, and I don't get stuck in what I was doing last year, right? Like what may have been working for me last year may not work this year, okay? You've got to continue to grow and develop and change and adapt. Okay, so what works in a bull market is not going to work in a bear market, right? And what works in a high momentum area of the market when the market's trending very strongly is not going to work in a high volatility, low momentum area where the market is ranging and choppy. All right, so your options are either you have a couple options. Either one, you have to have multiple strategies that you can cultivate and call on and successfully identify different areas of the market and then execute those strategies in. And I think that's the approach that I'm trying to take, right? I'm trying to build up my range trading skills when we're consolidating. I'm trying to build up my shorting skills when we're downtrending. I'm trying to build up my longing skills when we're moving to the upside. Alternatively, what you can do is you can settle on one type of strategy, and then you just have to learn to be patient. And see, for me, that's very difficult, right? For me, like not like often the best trade is no trade, and sometimes I'm quite good at that, but I want to be challenged continually, and I want to be able to trade continually. And I've made a lot of money doing that. I've lost a lot of money doing that. So it's just one of those things, right? You have to kind of pick how you want to trade, but always be open to new challenges, new experiences. I think that's one of the coolest things about trading from. That's why I love it. But if you're a key, and what's funny is that I just had. I guess what's the right term? I was just asked, basically some investment advice from a family member. And, this is just an individual who's worked for a long time, and they've seen their 401k take a large hit recently. And they said to me, they're like, Justin, like the market was just beating me down. And, I couldn't stand to see all that money drop. So I moved the funds into a savings account, and so that they could switch it back into the market when they think that it's bottomed out. And I think that's a good idea, because I do think the market's going to trend down more as long as there's this uncertainty about whether the situation with Russia and Ukraine is going to spill out into a larger geopolitical conflict, which overall I don't think it's going to, right? Like, I've done a lot of work on this, and everybody thinks that Putin's completely out of his mind or crazy, that he's going to nuke the whole world. I don't think that he is. I think the military, I think the military conflict in in Ukraine is unfortunately and devastatingly, like, pretty much going according to plan. But when I hear ICP lyrics about volatility confirmation, we could do, let's see here. Hold on, guys. I don't know if the hard tune is going to work here super well, but the robot. There we go. I think the megaphone will work pretty good here. So, I guess this is a good time to say, like, be willing to adapt. All right. Okay. All right. We'll take that off. Okay, so back to the story. Essentially, look, I know what it's like to. I do, guys. I know what it's like to have a portfolio that you've watched go up and up and up, and you see that number toward the end of the bull run, and you start making plans for your future life based on that number. Okay, and then the market does what it does and corrects. And it just depends on it depends on your age, and it depends on your time frame, right? So I think for people who are in their 30s and 20s, you need to be long-term holders, right? If you need your money in the next 5 to 10 years, then you have to take more of a risk-off approach. But history has shown time and time again, right? Like, if you're not looking to cash out in the next year, typically stepping out of the market is one of the worst things you can do. It's just fact. It's just true. It's just logic. So yeah. Peckham08 says we go north, not south. This just in, breaking news. Peckham08 says we're going to the upside, not to the downside. I kind of hope so. Guys, I'll be making some modifications to, I'm going to be making some changes to my background here over the weekend. I got some pretty cool RGB lamps, getting the stream layout the way that I want it to be. So, all right. Yes, man. We need those millions now. All right. I think we're going to all in, he says. Okay. I want to show you guys a few things. Okay. Ron Legato's liking MicroStrategy recently. Thoughts? The interest. So I love Michael Saylor. Like, he's very intelligent, very, very interesting to listen to. But the thing about MicroStrategy is that its stock is seeming to essentially trade in tandem with Bitcoin. And that's kind of a danger of being a company that puts equity into a volatile cryptocurrency to the point, and like you're percentilizing and spending all your time talking about Bitcoin on Twitter and all that stuff. I wonder how like the company MicroStrategy feels about that. But whatever, he's Michael Saylor, can do whatever the fuck he wants, I guess, right? But yeah, I think what's funny is I think that MicroStrategy is likely to move alongside with Bitcoin, because that's what I've seen it kind of adopt to over the last few months. So yeah, that's the Odyssey G9, guys. It's a good monitor, but it's not perfect, right? Like, I love it, but there's things about it that it's pretty cool. I'm not gonna lie. Okay, let's go here. Okay, just anyway, selfless plug before we end the stream, guys. I know that most of you guys here are actually members of the Premium Trading Group, but for those who are not, okay, if you guys enjoy the analysis and you guys would like to trade along with us, if you guys would like to utilize our Premium Indicator Suite, which I am currently working on building out, there's currently 12 indicators that are part of that, and I use them every single day for my personal trading. The premium trading services, you can get access to our buy and sell alerts, as well as our premium Discord to get access to our strategies. So, I've been trying to find the opportunities to balance my work and life and everything that I do in the group. But essentially what we're going to be doing moving forward is I definitely want to be putting out the end of week newsletter, essentially, to all the members so that they can understand exactly where I'm at with all of my positions, what I think is going on and happening in the cryptocurrency space, and what I think is next for the markets. And then I'm going to be adding, obviously, the Pine coding to the Trading Academy. There's already the Pathways to Profit and introduction to the Premium Trading Group right there. The premium member onboarding. So make sure that you guys, if you guys are members and you haven't logged into the Academy, make sure you go do that. You go to the website and log in with your Discord, and you get access to the Trading Academy. You can have access to the entire Pathways to Profit course, which teaches you how to build a fully systematic, profitable, indicator-based strategy from the ground up. Right? Walks you step by step how to do that. You can do those with indicators from the Premium Indicator Suite or not. But I'm going to be adding the how to Pine code so you guys can start building up and automating your own strategies and alerts, something that I've taken a lot of joy in doing. And I'm going to be releasing the basics of Pine coding. I'm going to release that on YouTube to hopefully kind of expand the scope of the audience and get more views. But the advanced strategy building stuff is only going to be for premium members. I'm going to put that in the Trading Academy. Yeah. So that's about it, guys. All the links are in the description for everything you could possibly need. Give a brief shout out to, let's see here. Right here. Give a brief shout out to the exchange of choice right back there on the screen, ByBit. You guys can sign up at bybit.crackencryptocurrency.com. They currently have a $300 sign-on bonus if you could do all their social stuffs. And actually, I think it's they've actually got more bonuses. I think they're doing the competition right now for $1,000 if you guys go create a ByBit account. That's where I do the majority of my trading, and I do everything on there from the BTC. Volume by price must be nuts on that monitor. Thank you, man. Yeah, they're doing a competition for like more now. And I did talk to them over there, and we might do another trading competition coming up. But I kind of want to finish recording all the new content that I'm working on first before we do that. So as always, thank you guys, everybody who watches the stream. If you guys enjoy the content, make sure to like the video here on YouTube and consider giving us a follow or a subscription if you guys have not already. I'll be back on Monday, and I'm going to do my best, although we do have family visiting over the weekend, so I probably won't be able to finish it. But the next YouTube video that I'm going to be making is going to be, this is something that I've been doing for the last like 3 or 4 months with pretty good success. I've made about $30,000 doing it. But finding ultra low cap coins that have just listed on the Ethereum blockchain and aping into them, so like brand new coins, as soon as they're basically listed on Uniswap, and I ape into them and look for like a 5x or a 10x but again, I've gotten pretty lucky with a few of them. I've got rug pulled on others, and lost like a couple grand here, a couple grand there. It's a pretty high risk, high return strategy, but I mean, over about 4 months, and again, that's so almost the majority of that's been in a downtrend. I've made really good returns. So I'll be releasing that video here on YouTube and kind of talking about how I came across that and my little tips and tricks and the tools that I do now to avoid getting rug pulled more and to have better results when I do those things. So anyways, how about the coin I posted in general yesterday? One second. Interesting. I got a little condensation on my monitor back there. Hedron. Okay. Yeah, so something like that. Yeah, exactly. So, the reason I like it, there's, so again, it's very similar to a strategy that I've employed on centralized exchanges, where essentially like once they list something, I ape into it. But on decentralized, I've just been doing it on decentralized exchanges the last 2 to 4 months. So I don't really like that. That's about it. Like the second it lists, like I just get it, I just buy it, like I just send it. And I do look, so there's like, again, I'll talk about this in the video, but there's a lot of stuff that I do. I spend about 30 minutes. Anyway, well, it used to take me like 2 hours, but then you miss out on like 100%. But I've been able to like, you just got to get fast at it, right? Like you got to, I fucking love Joe, dude. You've got to, you have the ability on the Ethereum blockchain to click into the contract, look at the contract creator, see where they source their funds, see all the contract interaction they've done with the smart contract, see if they've renounced ownership, see if it's a honeypot, see if it's if it's likely a scam or a rug pull. So there's lots of cool things that you can see. And just the thing is, like, I mean, I've seen so many of these things like 50x in a day. So it's pretty fun, and I just use momentum like after that, and I just kind of that's funny. One of the reasons I started doing that is because I was, I've researched Anton Creel before and some other big traders, but I was actually doing research on Anton Creel Some of you guys may be familiar with him. He's a pretty popular trader. He used to work for Goldman Sachs. He did a show on the BBC called $1 Million Trader, which was pretty good. But the way that he got started trading and how he made his money, and certainly how he made Goldman Sachs money, was flipping IPOs, right? So this was in the IPO craze of the 2000s and or the 1990s, really, and actually no, the 2000s. And yeah, that was the strategy. Like as soon as the company goes public, you buy it, and then you look to sell it later in the day, and you double your money, triple your money, and you just rinse and repeat that. So those are the opportunities that we have here in cryptocurrency, and they're not going to be here forever. So you got to take advantage of those while they're here, guys. So, all right, guys, that's about it for me. Thank you guys so much for joining us for another episode. I'll be back tomorrow. If you guys have any questions, comments, concerns, sarcastic remarks, and or death threats, leave them in the comments section down below, or stop by the Discord. Link is in the description, or visit discord.crackingcryptocurrency.com with all of your concerns, worries, complaints, thoughts, fears, and alpha. Alpha. It's a good one. So anyways, guys, I'll see you on Monday. Trade safely and cheers.